Howdy there folks, and welcome into this. Look at this, it's a rare whiteboard video. You guys don't get many of these nowadays, but I thought we would do one here today. We're talking big picture here. We're talking about scaling your portfolio, your stock market portfolio to $1 million plus. And I want to give some tips on how to do this. And I think everybody that watches my channel a lot of you guys know the obvious things to do, right? And the obvious things kind of not to do. And so I want to get into a little more complicated things that I don't think people kind of think about, and kind of how my mindset is in the market as somebody that's been in this market for 12 plus years now and has seen a lot of people, come and go in this market, and the ones that really thrive and the things I personally done that have helped me out tremendously in the market over time. I think the dollar amount, $1 million, I think it's magical to a lot of folks because let's be honest, most people think, well, if I just had my money in an S&P 500 index fund or something like that, you usually get about 8% per year. So a lot of folks figure, okay, I got $1 million, I get 8%, it's $80,000 per year. And I can tell you, far majority of people out there live on way less than $80,000 a year, right? Most folks probably live anywhere between $20,000, and this is in developed countries, right? Between $20,000 and $40,000 a year is what they actually spend to fund their lifestyle, right? Their mortgage or their rent, their car bill, like the necessities, right? Phone bill, stuff like that, the electric. And so 80,000 to a lot of people is very attractive, right? And so I think that's one of the big reasons why this $1 million mark is magical when you're thinking about the stock market and climbing to $1 million plus in stock. So we're going to get into this, guys. I'm going to give you kind of my tips on what to do, what not to do in trying to scale your stock market portfolio to $1 million plus. Something I've been fortunate enough to do, in my first 10 years of investing. And obviously nowadays we're at much bigger numbers than that. And I hope as many people watching this video as possible can also reach $1 million plus in stocks over the coming years. Also, keep in mind, it doesn't happen overnight, guys. So hope you enjoy this video. Hope you get a lot of value out of it. All I ask in return is that you smash that like button. That lets me know you guys enjoy a video like this where I get into a lot of tips around being successful in the stock market and things like that, guys. It lets me know you enjoy a whiteboard video like this, and it helps out huge in the YouTube algorithm. I appreciate all you guys for being here as always. And by the way, we just launched a new service essentially where you can text me literally for free. I'm gonna try to get back to 5 people a day. That's gonna be pinned comment down there. If you have any stock market related questions, feel free to ask me and I'll try to get back to as many of you guys as possible, okay? Alright guys, so let's get into this, alright? So, the obvious things. I think everybody watching this video, or most of you guys, know the obvious stuff that if you want to be successful in the market, you want to get to $1 million plus in the stock market, right? You probably know the obvious stuff. Put in your research work, right? Listen to conference calls, read the 10Ks. By the way, a really exciting feature coming to the Hungry Bowl app here probably within the next week. SEC reports, I already have the test trial that the software team's been able to put that in. It is amazing, okay? But anyways, everybody knows the obvious stuff, right? Listen to conference calls, read the SEC reports on the Hungry Bowl app. You all know that, right? Put in the actual research work, Google News it, find out any investor presentations. I think all of you guys know that, right? Know the financial statements, the income statements, the balance sheets, exactly, what these different categories mean. So you can judge that business on a financial statement level and be able to understand, is this a good investment or bad investment based upon the financials, right? Know how to value stocks. That gets pretty complicated. I have a lot of videos on how to value stocks on the YouTube channels, and obviously in my private stock group, I cover that a lot, right? And to value stocks is different, right? To value a value stock is very different than how you'll value a growth stock. How you value a growth stock is very different than how you value a super growth stock, right? How you value a super growth stock is very different than how you value a dividend stock. How you value a dividend stock is very different than how you would value a stock that's in the software space, right? So you got to understand, all these different stocks have different ways of valuing them essentially at the end of the day, right? If somebody's just a value investor, they're all automatically going to think every growth stock is a complete ripoff, which is not true, right? And at the same time, if there's a growth investor, right, and all they know how to do is value growth stocks, and they look at a value stock, they'll think every value stock's the greatest deal ever, and that's not true also, right? So you got to know how to value stocks, and you got to know not to panic buy or sell stocks, right? You don't want to FOMO into stocks. You also don't want to essentially panic sell stocks, right? That's usually a bad decision, right? So those are kind of the obvious things that I think most people watching this video should know, okay? Now, before we get into any of these 8 points here, something very important I want you guys to all keep in mind, okay? For anything, take off the limits, okay? Take off the limiting beliefs. For something like this to happen, you have to truly believe it is possible. If you don't believe it's possible, it's going to be very difficult, to get there, right? Now, you don't know the specifics on how you're going to get there, just like I didn't know the specifics on how I was going to get my portfolios to $1 million plus. You never know exactly what year it's going to happen. You never know exactly how it's going to happen. You never know, this is going to be your biggest winner stock you ever had, right? You never know, this stock could be a big loser, those sorts of things, right? but you got to take off the limiting beliefs that this isn't possible. If you believe it's possible and you put in the work, you're basically manifesting that to happen in your life, right? If you're putting in the work and you believe it's going to happen, you're going to be able to manifest that in your life. You don't know what year it's going to happen. You don't know exactly how it's going to play out, but it's going to be able to play out there if you truly believe it and you're willing to put in that work to actually do it and actually accomplish that, okay? Something very important, because if you have this limiting belief that you can't do it, it's impossible, how are you going to do it? Then it's like, it does become impossible because you just can't imagine yourself doing it, right? And it's like no different than if I imagine myself flying in the air, right? Like I just go up in the air and I start flying like an airplane. That's impossible for me to imagine, right? And I'm never going to accomplish that. I'm never going to do that, right? And if you're viewing like the stock market like you're trying to fly like an airplane, you're like going to just start flapping your wings and you're like, that's impossible. You're not going to do it, right? So keep that in mind, guys. It's absolutely possible to reach $1 million plus in stocks. Believe me, a lot of folks have done it out there. And I can tell you, how much of a percentage of the world's population, or even the United States, even just to talk about the United States, how much of the United States population is actually spending time thinking about, I want to get to $1 million plus in stocks, right? Think about that for a moment. What is it? 1% of the population? 2%? I could almost guarantee you, I would almost take any bet on this. I bet you almost any money that less than 5% of the United States population is thinking right now, how am I going to climb to $1 million plus in stocks? Less than 5% of the population. So if you're wondering why the numbers are pretty low to even achieve something like that, most people aren't even thinking about this. Most people aren't even trying to do something like this, right? And we're not talking about $1 billion plus in stocks. That's really big, huge stuff, right? We're just talking about $1 million plus, okay? So take off the limiting beliefs, all right? Now, the first thing up here, you've got to take advantage of the 3, 6, 9, and 12 month spans, okay? You've got to take advantage of these. And what does this mean essentially? Well, you have certain time periods in the stock market where for 3 months, 6 months, 9 months, sometimes 12 months, the stock market will downtrend or not do much, okay? Or specific stocks or categories will not do much, right? Or they'll downtrend, right? And the thing that's going to really propel you is taking advantage and buying those big dips on great companies that are basically going down in the short term, right? Now, there are some time periods where the stock market in general dips bigger than that, or stocks in general dip more than 12 months, okay? But it's very few and far between. That's usually only during like a massive recession or something like that. Usually what happens is stocks will take a breather, they'll downtrend for 3 months, 6 months, 9 months, and the next thing you know, they roar higher. Okay, even the best of the best stocks that you can imagine over the past 10 or 20 years, they all do this. Think about Amazon, think about Apple, think about Nvidia, think about Tesla, like any stock you could possibly imagine that was a B stock over the last 10 or 20 years. They all had time periods where they downtrended or did nothing for 3, 6, 9, 12 months, did absolutely nothing, maybe even went down. And every single time, if you were taking advantage and buying those dips, you made a whole lot more money, right? Because I mean, let's imagine, it's many, many years ago. Let's say it's Amazon stock, right? Amazon stock nowadays is like, I don't know, $3,000 plus, right? But let's imagine, this is, many, many years ago. Let's say maybe 7, 9, 10 years ago. Let's say Amazon's like $400 a share, right? You think it's a great deal. You believe in the company a lot over the long term. You start buying it at 400. Next thing you know, the stock market downtrends for a bit. Tech stocks downtrend, or Amazon in general downtrends for a bit, chills out. Next thing you know, it drops to 300. You got to take advantage of that deal. You got to buy more shares on the dip there, right? And as long as you're right about the trajectory of that company, which if you're putting in the research work, you know how to value stocks and you know how to judge these things, right? High probability you're going to be right on that, right? That's where you get the real money made. And I can tell you the majority of stocks that I made huge money in, and when I say huge money, I'm talking minimum of $50,000 just in that one stock alone. The high majority of those stocks, if not all those stocks, guess what I did? This exact situation where I would buy in, I thought it was a great deal, the stock didn't do anything or downtrended for a time period, I bought heavier and heavier and heavier, and the next thing you know, everything played out the way I thought it was going to play out, and I made a ton of money, right? And every once in a while I could be wrong, but those are very few and far between, and the majority of the time I am right. The high majority of the time I'm right. And so when I'm buying on those huge dips, I'm essentially just getting shares for even a better price, and those are the ones that make me the crazy money in the end, okay? And literally, if we went through my track record of the last, let's just say 5 years, almost every single huge winner I had, was a stock that I bought heavier after it dipped more and more, okay? So some food for thought here, guys. You gotta take advantage of those time periods when people are down. Now, the worst thing is some people get discouraged by those time periods. Those are what we call the people that aren't gonna be in the stock market for the long term, okay? If you get discouraged because your stock downtrends for 3, 6, 9, 12 months, you're not cut out for this. You're just not cut out for this. Or you need to like really look in the mirror and be like, you know, why am I getting so discouraged over this? This is the way the stock market is, okay? And so if it's, you know, 3 or 6 years, that's a total different story. You picked a bad stock, okay? If you're down on a stock for 3, 6 years, you picked a bad stock, right? Like that one went bad, right? But for 3, 6, 9 months, like give me a break. Like you should almost expect that to happen, right? Unless you're in some roaring bull market where everything is shooting to the sky, you should expect that there's a possibility that that stock will go down. Every time I buy a stock in the short term, you know, it's like flipping a coin. It could go down, could go up in the short term. I think 90% plus of the time, I will be correct that it will go up a lot in the long term, which means over the next 3, 5, 7 years. But in the short term, like anything can happen over the next week, over the next month. You know, your guess is as good as mine. Everybody can pretend to guess and be like, well, no, come on, okay? You know, that's all a guess in the end. You got to take advantage of the big dips there, okay? Let's get into number 2. So in terms of scaling your stock market portfolio to $1 million plus, you know, knowing where the groups are that basically stocks are dropping is very, very important, all right? And when I say groups, what I mean essentially is, are small caps falling during a time period, or large caps falling, or super large caps falling, which I mean, you know, basically it's like big tech. Yeah, they kind of have their own category in my opinion. Is it mid caps that are falling? What are these groups that are falling during a time period when it comes to stock market? Recently, for the past few months, it's been small caps. Small caps have been getting devastated. A ton of them down 50, 60, 70, 80% from basically their all-time highs they reached back in February, right? The small caps, in very, very specific ones, right? It's not like every single small cap's a great deal, but where I'm finding a lot of the great deals right now in the market and over the past few months has been in the small caps, right? And so where am I spending the majority of my personal research time? It's in a lot of those companies that have $1 billion, $2 billion type market caps, maybe even $3 billion, $5 billion, right? But smaller companies in general. I'm not seeing great opportunities in big tech. I bought some Amazon when it made a big dip recently. You know, I'm up like 5% on that right now. Obviously, I'm a believer in Amazon long term. I think I'll make a lot more than 5% over the long term, right? But it's not like I'm seeing tremendous values in all the big tech or something like that right now. And just a lot of the $100 billion plus market caps, I look at a lot of those valuations on those companies and it doesn't seem that attractive based upon where a lot of those companies are trading at versus, you know, what type of growth prospects they have and those sorts of things. But the small caps where I see the real opportunity, so that's where I'm spending the majority of my buying time and my research process, okay? So keep that in mind, and this goes back to kind of where do you take advantage of dips in the market. Now, keep this in mind. There are going to be certain time periods in the market where everything falls, right? You know, big tech falls, large caps fall, mids fall, small caps fall. You know, it's going to be certain time periods where everything's just getting devastated, right? A great time period to look back at was 2020, right? When Rona started taking off, you know, toward the end of February leading into March, everything was down. I don't think I know one stock that was up during that whole time period, right? And then we started climbing out toward the end of March, beginning of April, and things started to climb from there, right? But if you look at that time, almost every single stock got devastated. We were in a straight up stock market crash, right? Market fell 35%, and I believe it was 22 trading days, which I believe was the fastest crash in the history of the stock market, even going back to the Great Depression, which is pretty epic, right? But you got to understand, that's going to happen sometimes, but that's not always what happens. Sometimes there's going to be, you know, a specific group that outperforms. Maybe it's big tech outperforms during a time period. Maybe it's small caps outperform during a time period. And there's going to be certain groups that underperform. My job is to find the ones that are underperforming, right? Probably try to stay away from the ones that are outperforming because it's probably not as good as deals there, right? Look at the ones that are way underperforming and spend my research time and my buying time there. That's what I love to do, guys, okay? So you got to find those groups that are dropping, okay? Number 3, you gotta be very, very wary. If you're talking about getting to $1 million plus, it's not just about making money. It's about how much money do you lose if you ever lose money in stocks. You gotta be very wary of buying overhyped groups. And we definitely saw a lot of that in the back half of 2020 and beginning of 2021. I'll give you a perfect example, okay? EVs, the EV companies in the back half of 2020 and beginning of this year, I mean, every single stock in the EV category was pumping like insane, right? It didn't matter, you know, what you were doing. It didn't matter how much you proved. If you were just had EV in your title, you were like up 10, 20% every day, right? And the worst part is everybody was treating these stocks like they were equal. You know, a lot of folks were thinking, oh man, you know, Tesla is being outperformed by this other EV stocks. So those other EV stocks even better, right? It doesn't work like that, guys. Okay, Tesla's a very special company in that market, right? But everybody wanted to be in anything EV related, and you know, it didn't matter if it was Nikola, it didn't matter if it was Workhorse, it didn't matter. As long as you had some sort of story around you're trying to be an EV company, people were flocking to those stocks in mass. And why were they? Well, because they were going up and they were making people a lot of money, and people see these people making money and they're like, oh my gosh, I got to get in too. They don't even know if those companies are going to be successful or not, right? They don't even have a conception of that. All they know is I put some money in, I just doubled my money, I got to put more money in. You know, hey guys, this is where the easy money at. Come over to the EV stocks, right? And I watched that happen in the Jack Jackson stocks, okay? Many years ago, that happened. I remember Tilray climbed to like some ridiculous level. It was one of the most, you know, bubblish stocks I'd ever seen in the history of the stock market. And you're going to get those time periods where every single person, it seems, is trying to get into these type of stocks, right? And they're trying to play these type of plays. And I just tell you, be very wary of when every single person out there, it seems, is trying to get in certain groups of stocks, guys. And it's going to happen in the future where there's some new industry, some new stocks that all of a sudden are coming out, and everybody starts flocking to it. Maybe it's like NFT stocks. Maybe that's the next wave. All of a sudden, next year, all these stocks are like, oh yeah, we're going to do this with NFTs and da. And then all of a sudden, those stocks all start flying high, right? And then next thing you know, all of them go down 70, 80, 90%, right? And maybe one or two actually makes it out on the other side. It happens all the time. It will happen in the future. Be very wary of those groups, especially once they've already made it to the prime time. And once everybody's talking about it, mainstream media, it's on all the Wall Street bets forums and everywhere, that's when you need to be like, oh boy, there could be some trouble ahead here. And if you look at, you know, for instance, EV stocks, almost every single EV stock out there is down significantly since January, February, when a lot of those stocks peak. And the majority of them that I've seen are down over 50% since then, right? It just got way overhyped and everybody's just like, you know, and then all of a sudden it comes back down to reality. And some companies now are looking at bankruptcy or trying to figure out, like, you know, how they're going to make ends meet, because that whole, you know, bullish thesis that they were talking about, it died down quick, right? Be very wary of the overhyped groups, all right? Now, 4, 5, and 6 are a little simpler, which is why I wanted to combine all of these three essentially, okay? So first one up here, you know, when you're talking about learning, you know, about stocks, like, you know, how to value these stocks, you know, what to research, things like that, learn from the track record. Don't just learn from random. Think about how many different books you can learn from, right? How many different courses, how many different YouTube channels, how many different websites, how many different blogs, right? How many different social media accounts? There's like, you know, a million, right? But the thing is, the thing I would always say is look at the track record and pick very selectively who you want to learn from. And, you know, like if I was to go on Amazon and type in stock market investing book right now, there's going to be thousands, if not tens of thousands of books that come out. But how many of those folks that wrote those books are actually successful investors themselves? Always look at a track record of an individual. So when I got in the market and was trying to learn, I was trying to find like who could be my indirect mentor, right? I'm gonna have probably no connection with this person, but I wanna learn from them. And I found Warren Buffett, and I looked at Warren Buffett's track record over the past, you know, a ton of years, right? And this is in 2008, 2009, and I was like, this guy's extremely successful. He's a heck of a stock picker. The times he misses is very few and far between, and most of the time he makes money. This is a good individual, and he can also break these things down to be very understandable, right? And so I picked Warren Buffett, right? And so this is something very important to keep in mind. Before you ever buy a book, before you ever buy a course, before you ever get involved with YouTube channels, websites, blogs, social media accounts, all those things, look at the track record. Something I've always tried to do on my channels is talk about the stocks I'm actually buying. And you can view my track record. And recently somebody at a very prestigious university did basically a track record of my stocks I've invested and talked about on the channel over time versus S&P 500. And it was disgusting how much we killed it there. But that's why I want to do it, because I'm looking at it, I'm like, how are people supposed to trust to learn from me if they can't see my track record? So that's why I continue to do the 3 stocks. And if you go through the majority of those stocks, mentioned on 3 stocks I'm buying over the past 5 years, you're going to find the majority of those are up big, okay? The high majority of those are up big, and some of those are up, 1,000% plus. And a few of those are down, but it's very dang few and far between, okay? You gotta just not learn from anybody. Make sure you see the track record, okay? Very important. Not a lot of people, people want to just read the slickest book or, whatever is the smoothest talker or whatever presents things the most interesting way on a website or something like that. Trust me, guys, look at the track record. If they don't really have that out there where you can see all that, right? And you can see, oh, they bought this stock. Oh, they sold this stock. Oh, they bought this stock. Oh, they're making these moves, right? That's all I'll say about that. And if they're brand new to the market, that's a whole other thing, right? Number 5, okay? Re-in always. Another very simple one here. Always reinvest your gains, right? If you're taking, let's say you make $10,000 from a stock, great, you should be proud of that. But my view on this is if you take that $10,000 out and then you go spend that money, I just think it's a waste, right? It's to me, the way I view that, it's like, imagine you make it as a professional athlete. You become a professional football player or something like that, and you're in the NFL or you're a basketball player, and then you get to the league and you're like, okay, I'm good, I can stop working out. Some players actually do that, right? And it's kind of sad, and their whole career goes down. Next thing you know, 3-5 years down the road, they're already out of the league. We've seen it a ton of times, right? It makes no sense to me. It's like, now's prime time. You're starting to make some good money in the stock market. Reinvest that money. Take those gains and reinvest in the next stock. Take the dividends you just made, reinvest it in the next one, right? To just go ahead and cash out and be like, I'm done now, it just doesn't make any sense. It doesn't make any sense at all. Enjoy a 10, 20, 30 year span of growing your money bigger and bigger and bigger into a big pile. And then if you have so much money eventually someday that you're making hundreds of thousands of dollars a year from stocks and you only need this much to live and you want to take some money out, respect, then you can do it, right? But to do it like within your first 5 years especially, it's never made sense to me. Reinvest that, baby. Get the pie bigger and bigger and bigger, or reinvest in yourself and something that will help you make even more money or get even better gains, things like that, guys, okay? So always reinvest. Number 6, simple one here, okay? Say hi to Uncle Sam, okay? That's the tax man. The tax man is Uncle Sam, right? And this is something very, very simple to keep in mind. When you build up to these bigger and bigger amounts, you know what else happens? The amount of taxes you have to pay starts going up and up and up. And this is why it's very important to be taking long-term capital gains on stocks rather than short-term gains on stocks, right? Because when you start getting to bigger and bigger numbers and all of a sudden you're taking a $100,000 gain on a stock, right? Plus, let's say you have a job where you make 100K. Now the tax bracket you're going to be in is going to be 30-something% versus if you took a long-term gain on that, you might be taxed at 15%, right? So this is very, very important to keep in mind. The tax man, okay? The bigger those numbers get, the more in taxes you have to pay, and the more strategic you got to think about long-term capital gains, which is holding a stock for a minimum of 1 year, or making qualified dividends, or short-term, right? And then you got to pay a huge tax rate as your numbers climb bigger and bigger, right? Number 7 is something I've coined over the last year or so, which is GVD 123. And this is a strategy, and I got a whole video on this channel about it. I'm probably showing you the thumbnail right there. GVD 123 strategy. That video goes all into the strategy very, very in depth, okay, if you've never seen that one. But GVD 123, in terms of this strategy, it's essentially where you implement an investment strategy and portfolio where you're investing in growth stocks, value stocks, and dividend stocks. So you're not just making a decision where you're only going to focus on one of those stocks. A true great investor, in my opinion, over the next 20, 30, 40 years is the investor that can see opportunities in growth stocks, value stocks, dividend stocks. If a person is just one-dimensional, they are just, it doesn't mean they can't be successful. Let me be clear about that. It's just, if I view like who's going to be the most successful investors over the next 20, 30 years, they're the ones that can pick all three and know how to find great growth stocks that have tremendous opportunities in front of themselves and know how to find great value stocks that are tremendous opportunity in dividend stocks, okay? That's going to be who's truly the best of the best. You could be a pretty good boxer and just have one big haymaker punch, okay? That's like if you only know one of those, right? But the best boxers are the ones that have that great punch, right? But can also take a great punch and are great on defense to not take the punches, right? And so that's the way I kind of view it when it comes to stock market. You also want to implement where you put the majority of your money into essentially the stocks you like the best, right? It makes no sense to be in, 40, 50 different stocks unless you have some type of crazy money where you have like tens of millions of dollars in the market or hundreds of millions or something like that. Usually it makes sense to have, maybe 3 growth stocks, 3 value stocks, and 3 dividend stocks in a portfolio, something like that, right? And then maybe 1 spec stock or something like that, okay? But the best investors are going to be the ones that find opportunities. And why is that so important? Let me explain this real quick, okay? There's going to be certain time periods where, growth stocks are falling tremendously and they're getting very, very undervalued. There's going to be certain time periods where value stocks are falling tremendously and there's great deals all over the place in value. And there's going to be sometimes in the stock market where dividend stocks are going to be great deals all over the place. And there's going to be certain time periods where some of those categories are extremely overvalued and you can't find good deals in any of those, right? And so that's when you have to start searching for another one of these categories to take advantage of, right? Because if all growth stocks are a massive ripoff and you can't find any good deals, well, hopefully there's something in value or dividends, right? So you just kind of like, you increase the amount of stocks you can look into and the amount of stocks you're interested in, right? Okay. Last one up here is own the lane. The lane is your brain, okay? A lot of times people like to get caught up into whatever is talked about at that time period, right? And they get so caught up into that, right? Maybe they start getting into the overhyped stocks and things like that because they hear everybody talking over there about it. Oh, I just saw it on CNBC. Oh, I went on Wall Street Bets. They were talking about it. Oh, I went on YouTube and there was 12 videos about this stock. Things like that, right? And they start getting caught up into the situation where their brain starts being clouded by everything else out there. And so they can't really think clearly, okay? Own your lane. Own your lane, your brain. If all you're doing is constantly getting fed information from CNBC and Bloomberg and these other places, right? And you're not really focused in on the type of stocks you're looking for, you're going to have a clouded mind essentially at the end of the day. You got, Warren Buffett, he has a great saying. This is straight from Warren Buffett. He says, the best place to think about a stock is by yourself in a dark room, okay? That's what Warren Buffett says. I think it's great. I love it, okay? That's the best place at the end of the day to really think about these stocks and not get your mind clouded by whatever everybody else is talking about at a particular time period. Focus on what stocks you want to focus on. Don't focus on the overhyped categories, the overhyped stocks. Invest where you want to invest. Invest in the companies that you truly believe in over the next 3, 5, 7 years. And whatever those stocks are those stocks. That's between you and yourself, right? That's your portfolio. Nobody has to see that. That's between you and yourself at the end of the day. Stay in your own lane. Trust me, you'll have better mental health because of it. And most importantly, you'll be a better investor because of it, guys. So hope you guys have really enjoyed today's video. If you didn't get a chance to already smash that like button, please smash it for the YouTube algorithm. I appreciate you guys, and I hope you appreciate me taking the time to go through all these different points here today. And I hope this is a video that you come back to in future months or future years to learn even more from. Maybe you missed a point here or something like that, and you can kind of relearn from this as well. And I hope it helps you get to a place where you have $1 million plus in stocks over time. If you're looking to join my private stock group, my private Discord chat, you want to hear more about that, get on a 30-minute strategy session with somebody high up from my team, go ahead and check out the pinned comment down there. Also, if you're looking to text me any of your stock market related questions, feel free to. I'm gonna try to get back to a few of those each and every day, guys. Much love as always, and have a great day.